To our series, Choosing the President. Our guest, Republican candidate and former Senator Fred Thompson. And Senator, welcome back to Fox News Sunday.
Good to be with you, Chris.
Your campaign tells us you have a new tax plan you want to unveil today. What is it?
Yep. It's maintaining the tax cuts that we had in 2001, 2003. It's eliminating the death penalty. It's reducing the corporate tax rate. We have the second highest corporate tax rate among our competing partners. It's hurting us competitively. We're probably losing revenue from it. We have several other provisions in it, but another major one is an adoption, basically, of the approach that the House Republican Study Group has that would give taxpayers an option of continuing to file the way they do now or filing under a flatter plan where you only have two rates, but no exemptions past the personal exemption and no deductions. So give that a try, and it would be a major move toward tax reform, which I think is greatly needed.
Now, one thing that you also do is you repeal the alternative minimum tax. Obviously,
eventually,
there's concern about the fact that it now, because there's no indexing, that middle-class families who weren't supposed to fall under the AMT are now being hit. But you're going to get it for rich people as well. Why repeal it for everyone?
Well, it was a tax that never was supposed to be imposed on anybody except about 155 taxpayers. And now we're seeing about 23 million taxpayers. At the current rate, the AMT will be collecting more tax revenue than the regular tax system. So what we're saying is that let's index it from year to year until we get a handle on spending, and then we'll eliminate it. The government wasn't supposed to get that revenue in the first place, and it will not be the drag on the economy that I think the higher taxes would be. We're facing, after the end of 2010, a situation where a lot of revenue under current circumstances is going to fall right into the hands of the government. Taxes are going to be higher without anybody having to do anything. Automatic AMT increase, including millions of people who were not originally intended to be covered. Income tax rates going up substantially for just about everybody in America. And that's bad for the economy. We've known for years, anytime we have lowered taxes and anytime we've lowered tax rates, we've seen growth in the economy. Growth is the fundamental underlying factor that we have to maintain in order to be able to generate the additional tax revenue that we're going to need in order to be fair to the American people.
But we've also got to pay for our government. We went over your plan yesterday, crunched the numbers, and the best we could figure, it would cut federal revenue by more than $2.5 trillion over the next 10 years. That's roughly 10% of the government's budget per year. So how would you cut federal spending to offset this huge revenue loss, and be specific?
Well, I will be specific, but first I'll say I hope your estimates are better than the professionals who estimated that we would get so much less in capital gains revenue if we lowered the capital gains rate. They were totally wrong about that. They were wrong as to the amount of tax revenue we would lose under the 2001 tax rate cuts also. They always overestimate the losses to the government. We had one day in April this year where the government took in more tax revenue than any single day in the history of the country. So that's always missed.
You are going to have
that's always missed by the experts.
So give us three specific things.
Well, let me give you one big one.
Okay.
That's worth about $4.7 trillion. My Social Security plan. I have put out a Social Security plan, the only one among the Democrats or Republican contenders, that basically faces up to the fact that Social Security is going bankrupt, and we're going to have to do something about it. The comptroller, every economic expert who's looked at it says that it's unsustainable, and indeed it is. We're going to be going into the red in 2017. It gets worse from there. I've put out a proposal to save Social Security and save money for the government at the same time, and allow individuals to set forth 2% of their payroll into a private personal account, with the government matching that. In the long run, the government would come out ahead. A person would have a nest egg at the end of his retirement time. And if you do that in conjunction with indexing the initial Social Security benefit to inflation instead of wages, at the end of the day, you're going to save Social Security, you're going to put it on a sustainable basis, A lot of experts have already looked at it, and I think come to that conclusion. The National Review has reported on it. Investors Business Daily has reported on it. The Washington Post has analyzed it. And it will save the government $4.7 trillion at the end of the day. So eventually you do have to address the spending side, but the spending is going to have to be addressed on the basis of our entitlement difficulty.